Hello and welcome everyone back to the Hong Kong FinTech Week 2020. I'm Anthony Sa, the CEO and co-founder of FINNOVASIA, the appointed organizer of the event, and I truly hope that you're enjoying it so far. And I'm very, very delighted to host today this very special session. And I have two guests joining me today, Mr. Christopher Hui, the Secretary for Financial Services and the Treasury at the Hong Kong Government. I know that Christopher is very passionate personally about the fintech and spends a lot of time and brings a lot of effort to develop this industry in Hong Kong. And we are very grateful for the FSTB and Christopher's personal efforts to make this event as a big success. Thank you for joining us, Christopher.
Thank you, Anthony.
And we are absolutely also delighted that this conversation will be joined by Ms. Jessica Tan, the co-CEO and Executive Director, Executive Vice President of the Pin An Group. And just recently we came across the news that Jessica has been named among the 2 most powerful women by Fortune magazine. We sincerely congratulate you, and it's a big honor to have you with us today.
Thank you, Anton.
Perhaps I would like to start with Christopher. As we know that you've been appointed to this position back in April, and exactly at this point of time when the pandemic has been reached its peak in Hong Kong, and overall uncertainty with the global economy has been even more unclear, I would say. And it's unprecedented times for the governments everywhere in the world. And you have to react quickly to really minimize the impact of pandemic across different verticals. In relation to particularly fintech, could you please share with us what are the specific measures that FSTB and you and Hong Kong government in general has introduced by today in this sector, and how do you see the results so far?
Thanks, Anthony, and it is a great pleasure for me to be here with all of you to share the latest developments that we have in terms of how we support or promote the fintech sector. And to me, I must say, there are 3 key components to any fintech development. Number 1 is about people, and number 2 is about applications, and number 3 is about regulation. And I'll leave the people part to the last and focus on the applications and also on the regulation first. And on the applications front, I think all of you agree with me that Hong Kong is a comprehensive international financial center. We have a broad suite of expertise across various segments of financial services. But that said, if you look at the recent survey results, it is indicated that more than 85% of our financial institutions are willing or are ready to adopt fintech solutions. So the next question to ask is how we can promote that and also make it a faster and a quicker process. And here in the government, we are thinking of ourselves as a matchmaker, such that we can bridge the gap between these big FIs and also the fintech solutions being offered by our companies here in Hong Kong. And that's why we are contemplating a sponsorship program or a subsidy program to support our established FIs to co-develop proof of concept projects with our fintech companies. And the idea is for the government to provide a matching grant such that the fintech companies in Hong Kong can have their technologies or solutions being adopted in our FIs in Hong Kong. And this is something that we will go into deeper detail when we engage the fintech community here in Hong Kong and to gauge their views in terms of how we can make it more effective. So that's number 1 in terms of applications. And number 2, on regulation, I'm sure all of you will agree with me that there's always a balancing act, how we can better regulate the market, yet at the same time better develop it. And one key element for Hong Kong to succeed as a comprehensive international financial center is not just focus on bonds or equity, but to venture out into new asset classes. And I'm sure that virtual asset is something on everyone's agenda. And that's why we are now, again, planning to have a consultation on to have a regulatory regime in place for virtual asset trading. It's something that builds on our strength as an international financial center and able to attract new money as a result. And again, as a next step, we will engage the community and the market to see how we can devise the best program or the best regime such that we can strike the right balance between regulation and market development.
Thank you, Christopher. And yes, virtual assets is a huge topic, the regulation is, and I would invite everyone to watch tomorrow's conversation from SFC on that. But you also, Christopher, mentioned this the proof of concept sponsorship. I think it's also a great idea because unlike maybe the big, large tech companies, the smaller ones not necessarily have this runway to wait for to go through this, process with big banks, and this help will be highly appreciated. Jessica, I would like to switch to you, recently there was a news that Ping'an has invested a record amount of money to buy a massive office space here in Hong Kong and West Kowloon project, and yet you have your great headquarters just 30 minutes away from here in Shenzhen. So what was the reason behind this decision, and what role do you see Hong Kong would play in your further strategy of the Ping'an Group in general?
Yeah, so there's two reasons. I think one is just as part of our insurance portfolio. Do you remember that we manage about more than $1 trillion US, of which some substantial is actually insurance assets. So this is part of regular allocation that we like to invest basically in real estate, also diversify out of China. So for us, this is it's just like a long-term investment portfolio. So we look at this, our policy is typical 20, 30 years, right? So we're looking at this very long term. The second reason is actually more strategic, and I think brings on what Christopher was talking about earlier. Hong Kong does have very remarkable kind of strengths. It's built over decades. Growing up, it's not easy. If you actually, I'm sure Chris can remember, back in the days where there were the 4 Asian tigers, and and everyone was trying to build that. It's a long way that Hong Kong has built up the trust and the international financial center over time, and these are strengths that are very rare to do, right? So I think we see it as an important one of the important gateways out of connecting China and the rest, and also an important part of the Greater Bay Area. So despite it being a very integral part, we actually have, I think, 8 of our subsidiaries, with their regional quarters in Hong Kong. We just launched our Ping'an One Connect virtual bank. We have a One Connect that serves basically also in Hong Kong, and then also we have Lu International. We set that up. So we want to make sure that this is an integral part of the Greater Bay Area. And then we want our presence to be known also in Hong Kong, and hopefully be seen as one of the Hong Kong local companies too, as Christopher was saying. I love what he was saying about making the match, because there's actually a lot of innovation happening, but sometimes it takes a little bit of spark to kind of bring people together. So we believe very much in localization as well. So every of our company, we usually kind of incorporate there, and then we hire folks locally, because I personally believe a lot, like just what Christopher was saying, about application and it's about people. So you need to get people who understand the market, right? So we may have done a lot of technology, which are really spare parts and components, and we have the know-how, but you need also to work together with the local talents as well as the knowledge to be able to bring that together. So we look forward to the long-term growth here.
Fantastic, and we would be talking about touching this topic of talents a little bit later. And before that, Jessica, you mentioned the Greater Bay Area. I think that's very interesting point that for those who don't know, who are joining outside of this region, Greater Bay Area is the area that brings together Hong Kong, Macau, Guangdong, Shenzhen provinces, and it means to become one of the largest sort of regions that is consolidating together different industries with overall population of 70 million people and consolidated GDP of 1.5 trillion US dollars. And Christopher, just to follow up on that, the Hong Kong Monetary Authority, the People's Bank of China, and the Monetary Authority of Macau recently announced the launch of a cross-boundary wealth management connect pilot scheme within the Greater Bay Area. Could you please share with us, from your point of view, what kind of opportunities this initiative can bring for the cross-border wealth management industry within the region, and particularly how Hong Kong can benefit out of it?
Before I answer your question directly, maybe I can give you some figures to illustrate the size of the asset management industry here in Hong Kong. And right now, if you look at the AUM being managed out of Hong Kong, it's around like 10 times of our GDP. And if you look at specifically within this size or this quantum of asset management under our management, basically over 62% refers to money coming out of Hong Kong. That's why I would say that in terms of our asset management capabilities, this is something that stands Hong Kong out in terms of our ability to manage wealth for the rest of the world. And in terms of your connectivity program you mentioned regarding Wealth Connect, I think we have to trace a little bit back to the Stock Connect program that we had earlier. Because after all, in terms of Stock Connect is a program that we build bridges across the boundary with linking Cinten and Shanghai stock exchanges with Hong Kong. That's on the equity side. And on the Wealth Management Connect you just mentioned, it's on the banking side in terms of how we start from the GBA, Greater Bay Area as suggested, and have that as a pilot scheme such that investors or individuals on different sides of the boundary, be it in Greater Bay Area or the rest of the Bay Area, including Hong Kong, can trade products in the other region through banks, locally and also regionally. And it is a quota system in the sense that each individual investor will have a quota of $1 million. And also on aggregate, there will be a quota in terms of an aggregate investment size of 150 billion RMB for both investment going north and also for investment coming south. I think this idea is important of having quota in a sense that whatever program that will be in place across the GBA, basically it has to be in a way which is risk-friendly and also in a way which is business-friendly. By risk-friendly, what I mean is that it has to be something in a way which is manageable and controlled, such that our regulators are happy in terms of overall design of the program. By user-friendly, what we need to emphasize is that this program has to be convenient in a way which is to facilitate the mobility of capital cross-boundary. And this is something that we used to develop when we have the Stock Connect program for stock market, and now we have the Wealth Management Connect program for banking and its products. And the reason that GBA is important is that if you look at the size of GBA, as you mentioned, we have a population 10 times of Hong Kong. At the same time, if you look at the wealth management program, more specifically, it is something that we play out the specific strength of Hong Kong in the International Financial Center. Because after all, what we are good at, as I said earlier, we are managing wealth, which is 10 times of our GDP. So we are a good asset manager for China and the rest of the world. And for money coming south through the Wealth Management Connect, to be invested in Hong Kong's banks or other products. Basically, we are helping our growing affluent Chinese population to divest their assets. And reciprocally, for international money coming to Hong Kong and through this Wealth Management Connect, they can use Hong Kong as a platform to invest in the China market or to get China exposure. Because after all, if you look at right now, the size of GDP of China vis-a-vis the rest of the world is almost 1/5. But if you look at international money in terms of size, investing in China market or seeking China exposure, it's a single digit. So there's a gap here to be filled. And Hong Kong, being the place where money internationally and from the mainland converge, is exactly the place where this role can be played out perfectly.
Fantastic. Thank you, Christopher, for your insights behind your vision for the Wealth Connect and GBA. And Jessica, just to continue on this topic, a couple of months ago, the Lu International launched its operations in Hong Kong. It's the wealth tech arm of Penang Group. How do you see the further development of your wealth management business within the region, and how such initiatives like Wealth Management Connect could really help Penang to really tap onto opportunities in GBA?
So I think the macroeconomics of why this is important, I think Chris explained it perfectly. Now, the question have always been then for us as part of the player, how do we actually make that move? So I'll talk about two things. Sorry, one is really what Lufax is all about. With Lufax and wealth management, which we started, I think, about 8-9 years ago, we really have a passion of basically using technology to basically create the private banking, if you will, but for the masses, right? Because in traditional banking, it has always been historically true. You earn money from two groups of people: the really rich people who has money, and the really poor people who you lend money to. And then the rest of us, will be kind of in the middle. We never really have very good tier service. And then if you look at also the investment, a lot of Asians pick stocks and stuff, which is really not optimal in doing that. So I think we started Lufax with really this grand vision, right, of providing that to mass market. So our minimal allocation is $1,000. $1,000, you can invest in anything, right? Now, of course, in reality, to really make that work requires very efficient kind of product. allocation. And in China as well as in Hong Kong, Asia, the ETF sector, for example, is not as well developed as in the US and stuff, right? So I think with this Wealth Connect, and also with why we set up kind of the Lu Global in Hong Kong, as well as hopefully in the future, Ping An One Connect Bank can also expand that as well. We believe really in two parts, right? One is that I think we can bring on investors on both sides and provide an experience that is trusted and smooth and seamless. And then secondly, it's much more about the professional aspects about being able to pick from different assets, right? Which I think is what has been the secret sauce for us. How do you replicate at the private banking where you have a relationship manager to you, or at the institutional level whereby, for us, we manage $1 trillion, our strategic asset allocation is very optimized, to build that down to simple algorithm type stuff that for the mass market could actually pick, right? Now, of course, we're not at a stage whereby, they will just trust machines to do it, but at least you narrow down to a few choices for them to do it. And this is something I think one is on the consumer side and one is really on the product side, which we hope to replicate and do that. And then hopefully with Wealth Connect and other initiatives that can continue to promote, I guess, both investor and asset flow between the two, both China and Hong Kong. And I think Christopher sums it up very well, which through also gateway to then international, I think this will get more and more efficient. But we're in the very, very early days, but I think this is definitely the right thing to do.
Thank you, fantastic, Jessica. And now I think that it's a time to talk about another aspect of any business. It's about the people that Christopher mentioned in the beginning. And obviously the pandemic has significantly accelerated the digitalization in financial services and overall in every aspect of our life. And this year we see is dramatic increase of demand for the new type of talents, such as qualified software engineers, digitally savvy, product managers. My friend we had a coffee another day, and he's a software developer. And over the last 6 months in Hong Kong, he's received already 3 job offers, and each job offer 50% more than he previously was offered. So obviously, there's a sort of shortage of these talents. Problem is not for Hong Kong specifically. It's a global problem nowadays. So I would like to ask Christopher, knowing that you put a lot of personal sort of passion into that back in your days at the Financial Services Development Council. So how we can address this problem? What are the key solutions for that from your perspective?
Before again answer your question directly, maybe I give you some figures in terms of the value adding that our people here for financial services. Right now, if you look at the proportion of GDP, which is related to financial services, it's around 1/5. Around 20% of our GDP are about financial services. But we look at the total size of population working in that sector is around 260,000. So basically, among so many industries, financial services are having the highest value add across different segments. So the next question to ask is, as you rightly asked, is how we can nurture new talent and new generation of leaders for the continual growth of our financial services sector. And on that, I would say, nothing is more important than having our young talent being immersed in this new technology and new fintech environment, yet at the same time get for themselves first-hand working experience. And that's why on that front, we recently launched a FAST program. Essentially, through government's effort, we created 1,000 fintech job opportunities across different fintech companies in Hong Kong. And the reason we have that in mind and also launch this program is that we want to have our young professionals who are relatively hard hit by COVID to have a new opportunity to gain first-hand working experience. This is new fintech companies, such that when the economy picks up, then they'll be able to acquire new job opportunities and develop new careers going forward. And I'm very happy to say that just a few months since we launched this program, we have right now almost 700 applications, and basically most of them are having jobs located among SMEs. As all of you know, fintech companies, similar to many other SMEs in Hong Kong, are the pillar of our economy. So many of our SMEs being able to benefit from the program is something very pleasing. And also secondly, if it's not just about the corporate profile, but about the people, the actual job opportunities being created, I'm very glad to say that, in fact, almost 40% of the applicants are below the age 25. So even though right now we talk about COVID, we talk about unemployment, I think our young people are being given the right opportunities to expose themselves to fintech and also new segments of financial services. And as all of you agree with me that pandemic, even though now still persists, will end sometime. And the next question to ask is how we can perpetuate our momentum for growth and development. And this is exactly what we want to do, trying to plant the right talent for our future growth.
Fantastic initiative, Christopher. And Jessica, back to you. Obviously, for Ping An is not a lack of the technology that you, or the lack of capital. It's the main challenge is where you get, these people who would, help you to go through further scaling and growing your business. And given your ambitious plans to set up this, massive office in Hong Kong, and then grow existing businesses like One Connect, Power Bank, Lu International, how and where Ping An will be able to find these talents in the region, and perhaps you can share some of your insights and learnings on how Ping An managed to attract talents in mainland China.
Yeah, I'll share two experiences. One is when we first started. So I joined the Ping An about 8 years ago. At the time we had 3,000 developers, kind of traditional financial services IT shop, a good one. And today I think we have 35,000 developers. We have about 110,000 people working on tech companies. And this 8 years has been particularly tough in the first 3 years, really tough. I personally led our recruiting to the US. I went back to my school, MIT, etc. We have to introduce why insurance company is hiring, tech guys. Our data scientist, I remember when I hired him from Microsoft, has never done a day of financial services. And then, so we had to excite them differently. And I realized that when you excite about tech people, and particularly younger and younger people, it's not just about how much money we make. People sometimes they're not really impressed with that. It's more about what they work on. Right. So we talk about real life problems, right? We talk about how, when we try to do health insurance, the coverage now is not enough. We talk about, doing lending for SMEs. I talked about in the other session, how we actually address the gap where 80% of them don't get, non-collateralized loans, and 20% don't get loans at all from banks and stuff. So we have to excite them about problems. I think that was my first. And then after they come in, we have so much conflict. Our chairman, Chairman Mara used to describe like one is like from like sheep and wolf or aliens and earthlings. We have fights all the time. Our traditional one used to basically we have to punch our card every morning. And then the tech guys don't really want to do that. They dress differently and stuff. So it took us 2-3 years really to kind of mix it out. But I think now, one of the learnings I think is that for any kind of innovation, right, in fintech or anywhere else, I think this is the critical part where you have to get people from different background, and familiarity to work together for a common cause, right? And that's challenging. Attracting them is one, getting them to stay and work together is very different. So I think that's one thing that over time that everyone just had to learn through that. The second thing I wanted to kind of share also, just from the other side, right? I also noticed that, including my own girls, that a lot of people are not so prepared for more entrepreneurial type stuff, right? Working in a traditional bank actually, because it's so well run. Everyone has their role. It's very clear what you do, and everyone's really professional. And that kind of working style, lots of people are used to, and may not be so used to, when you are in kind of the creating mode. And when you're trying to set up a new business model, right, or trying some other innovation and stuff, it's less defined, and roles are not so defined. And I find that when we hire some of the folks, young people, a lot of them will burn out after 1-2 years. Because they find it's too stressful, and I think that kind of entrepreneurship is something that my belief is that has to be inculcated from young. So I'm not ashamed to say that I put my child through child labor ever since my daughters were 12 years old. I made them come to my company to do internship. I don't care if they just go and do interviews or whatever. I would like, I think it's good for our younger people, because Chris talked a lot about, especially below the 25, etc. Even back in school, to get more real life experience. It's not so easy to do that. And I think that kind of aptitude, because it's these are not professional hard skills. We're usually very good at training hard skills, but the softer side of things are a little bit different. So I think that would be very good to inculcate more and more. And then I would love to participate in what I learned so much in Christopher's sharing. This FAST program, I will definitely sign up to be one of them. I think it's a good program.
Thank you.
It's a very interesting point, Jessica. Yes, and it's interesting to see the shift over the last 10, 15 years, from Asian tiger moms that force their children to become accountants or, lawyers. And now with this trend of the tech entrepreneurs on the cover of magazines, and it's shifting towards this direction. I think it's quite remarkable. We have one question, I think very exciting one that everyone is talking about, that we'd like to cover in the end. Christopher, obviously, we already covered a few interesting points about the Greater Bay Area. And as obviously there's a lot of conversation going on how we can collaborate better on a sort of very new level across different regions. And could you share with us some of the updates on recent policy initiatives announced by the central government in Shenzhen just recently, and how companies like Ping An may benefit from it? And also perhaps if you have time, we could share your views on the central bank digital currency, or how it's called digital yuan pilot scheme by the People's Bank of China within the GBA, and specifically what role Hong Kong can play within this initiative.
Indeed, there has been a lot of discussion regarding how Hong Kong and Shenzhen can collaborate further. And to me, I think these two cities very much illustrate a tale of two cities. Basically, it's very much like the, if I may use an analogy, like the twin engines of an aircraft. And they all come together with different background, strengths, and also different strengths. If you look at Shenzhen, for example, I'm sure Jessica knows better than me that you have a young population. The average age is only around 33. And also in terms of the GDP composition, almost like 40% are attributed to services, to industries. But in Hong Kong, for example, right now, our population is not as young as yours, and also more than 95% of our GDP are attributed to service industry. And I must say we don't have much industries left. And that's why, as of technologies, in terms of next wave of cooperation, it will be a perfect match if we can bring together the technological strength of Shenzhen together with the financial sector strength of Hong Kong. So it's a bit like technology plus finances. So basically, very much in line with or the core strength of our respective cities. And to say that more specifically, I think right now, for example, we have a very robust listed market. Yet at the same time, in the private market side, in the PE and VC, is also increasingly growing momentum. Because right now, the size of our PE and VC market is second to the mainland in Asia. And recently, we just have a new regime to allow limited partnership to be registered in Hong Kong. And just a few days, this new program is being launched. We found that there are almost 20 funds, PE and VC being registered in Hong Kong. And in fact, most of them have GBA, Greater Bay Area, as their themes. So basically, you see a lot of international money using Hong Kong's legal framework and regime to register the funds, and for these funds to invest in GBA, of course, as including Shenzhen. So this is one way you can see there is a collaboration, i.e. Hong Kong being the financier and to support money going into China to propel or to spur the further growth in that region. That's number one. And number two, another direction is for money to go from China to Hong Kong and the rest of the world. And just now you bring about a very interesting topic regarding digital renminbi. And this is exactly something that we have been monitoring closely. Because right now, Shenzhen, among other mainland cities, is being included as one of the pilot cities to launch the DCEP, digital currency. And what we observe is that right now, what is being talked about is more at the retail level. But for a currency to fly, I'm sure that it's not just about retail payment, but more also about institutions, about payments across companies, and also about money being used not just as a payment, but also as an investment, as a risk management tool, and also potentially as a currency reserve. So in order to go down that path, basically there needs to be an international link to a digital renminbi. And Hong Kong is uniquely placed to do that because we have a long traditional legacy of being an international financial center. And also we have a whole wealth of resources and expertise who are very much aware of what's going on in China and the rest of the world. So to supplement that, as an international link for the digital currency for China, this is something that we will continue to push for. And that's what I would say as the renminbi internationalization 2.0.
Fantastic. And obviously the digital renminbi, in general, central bank digital currencies is the hot topic we are discussing it across different days at the FinTech Week this year. We running out of time. I just would like to ask the final very quick question to Jessica. From your experience, you've been working in different regions and you've been working in one of the largest technology companies in China driving this digital transformation. And since we have a lot of people from the financial services joining us this year's event at Hong Kong FinTech Week from traditional financial services, what would be the one piece of advice you would like to leave the audience with when it comes to what they should focus on doing now?
Okay. I think I maybe one advice is that for those who kind of in different tech industry, particularly if you're in a startup or creating something from scratch, I think you have to really have passion and also very aggressive goals. I used to be very scared of setting aggressive goals, but I think the aggressive goal forces you to actually think about a new model, right? It's not incremental. And once you reach that, it's just, it's amazing. The type of fulfillment you get is exhilarating. And I think it's just, I really enjoyed, every day in the past 8 years that I'm here, I learned so much, and it's nothing beats you going through. The often one thing that I tell my teams and my daughters is that, the bulk of our time spent working. Our entire life, we spend more time work than seeing my husband or my kids. And you can just go along and do the same thing again, or you can really make a shot and try and do something different that will have a lasting, meaningful kind of impact. And look, it's the same time that we all have, and why not actually make a pitch for it? And I think this is the time now where actually things can really change so much. A lot of things, technology is now possible. And I think it's now about how much you can actually dream and aspire to. So I look forward to meeting more people and working together.
Fantastic. Christopher, just one very fast question to you as well. We have a lot of entrepreneurs, fintech entrepreneurs joining this year's Hong Kong FinTech Week from over 100 economies. What would be your piece of advice to them when it comes to scaling their business in the region and in Hong Kong in particular?
I must say I've never been an entrepreneur and I wish to be one, but unfortunately I don't consider myself have the traits to do that. But that said, I would say that be brave and also be embracive of new development, because there's a lot of going on in China and in Hong Kong. And Hong Kong's role in the International Financial Center will continue to help you and to facilitate your success going forward.
Fantastic. I think we're running out of time, and I would like to say a big thank you, both Jessica and Christopher, for this fantastic conversation. I think the audience has a lot of, insights out of there. And, the Hong Kong FinTech Week is continuing. Please stay tuned for other amazing sessions that are happening on different channels across 3 days. And thank you both, and thank you very much for joining us today.
Thank you, Anton.
Thank you.
Very good to see you, Chris.
Same here, Jessica. See you.